Hi everybody, Jeff Yasteen here. Happy New Year to you. Hope you're having a great 2021 so far. And make sure to send me your comments and questions. It's jeff@yasteen.com. Follow me on Twitter and Facebook. Well, welcome to my Saturday mailbag video. I'm answering your questions about some of the recent videos I've done and the picks and pans in those videos. For instance, I said in a Christmas video to avoid Ag Eagle, symbol UAVS, mainly because the company has almost no revenue and no profits. And I said I would much rather own companies like AeroVironment, AVAV, or Cayman Corp, KAMN, both of which have lots of experience building autonomous aircraft and small drones and large ones for the U.S. Defense Department with long operating histories and consistent, steady profits. But some viewers took offense at that. For instance, Danny wrote, "How do those defense-oriented drone stocks compare to Ag Eagle? Drone delivery will be the next big thing." And Carlos wrote, "I thought Ag Eagle was partnering with Amazon." So I think Carlos's bigger point here is that isn't that a great reason alone to buy the stock, to own the stock? Well, let's take that Amazon comment from Carlos first. On social media, all I see is similar commentary that assumes that Ag Eagle is partnering with Amazon, case closed. But according to an October report in the Wichita Business Journal, Amazon is not partnering with Ag Eagle. The business newspaper said a company spokesperson telling the WBJ, the Wichita Business Journal, there is no partnership and that Amazon to date has not worked with Ag Eagle in any capacity. In a November article, the same paper reported again, Amazon also said that its previous statement regarding Ag Eagle had not changed. Now, for its part, all Ag Eagle has said is that it has an important customer, but because of contractual confidentiality obligations, it cannot state the customer's identity. But one thing seems clear, whichever or whoever that customer is, based on published reports, it is not Amazon. Now, my bigger point here, though, is to basically say that you need to watch what you're basing your investment decisions on and not on social media rumors and assumptions made by other people. Try to do your own digging, make your own conclusions, and take responsibility for them as you put your money to work. That's all I'm going to say about it. Quickly, I'll address the other comment about drone deliveries as the next big thing. Now, I agree, but emerging technologies cost a lot to develop, to commercialize, with potential profits quite often years away. And for that reason, a lot of small companies tend to fall by the wayside in these kinds of things. And I'll give you an example. 100 years ago, passenger air travel itself was a next big thing. The major airlines that we know today, like American and Delta, can all trace their corporate roots to delivering mail for the U.S. postal system back in the 19-teens and 1920s. They received guaranteed, lucrative federal contracts. They used that money while the emerging industry of passenger air travel became big enough and profitable enough to support their businesses in a full manner. So that's why when it comes to delivery drones, I think the better play is to go with companies that are already building drones for the military. Basically, the federal government writes the check for the development costs until the drone delivery industry is ready for prime time. So switching gears, I also did a recent video about Apple and its so-called Apple EV. And I suggested selling the stock. And I don't think an Apple EV is a wise use of shareholders' money. I said so in the video. And I think it's a bad decision by Tim Cook if they pursue it. Apple shares are already extremely highly valued. I think it's a good opportunity to sell the stock at a great price. And my friend Mike also took issue. Apple is still expanding. It's going to be a leader in 5G. It's expanding into India, he writes. This seems extremely bullish. So Mike, I don't disagree. Apple still has many opportunities. But the bigger question, in my opinion, is whether any of them are going to move the needle, so to speak, and grow profits in a significant way. Now, this is a problem not just for Apple, but for any company Apple's size. So yes, the company is still expanding, but is it extremely bullish? I disagree. The stock has already had an amazing run, and much of the future growth that we're going to be talking about for now and in the future I think is already baked into Apple's stock price, in my opinion. And that's why I would beware buying the stock at these levels. My last question is from my friend Janice, and she watched a recent video of mine that I called The Bubble Market and Beyond. The point being that we are likely in a tech investing bubble, and to use care as to where we invest and speculate in the coming year. And she notes her top 10 investments are Microsoft, Apple, Google, Roku, and a handful of other high-flying, very successful tech stocks. Is there any potential here for returns over the next 2 quarters, she asked. So Janice, I do not know. I'm not a registered investment advisor. I'm not a financial planner. So I certainly can't answer your question individually. And of course, I also don't know if these are your top 10 investments that you've owned for many years or just a few months. But my opinion is that there's a lot less potential now than a year or two ago, simply because so many tech stocks, like the ones you own, are already highly valued relative to the profits they earn. So when a stock is overvalued, expectations from investors become ever higher, and so it also then becomes more prone to potentially large sell-offs too. Now, I might be completely wrong. Certainly, if you look around to the experts on Wall Street, there's almost complete uniform agreement that 2021 is going to be a great year for the stock market, and they could be right. But I get really worried when everyone on Wall Street agrees about that much on anything. Usually the opposite happens instead. And the main thing I'll say is to think about it in terms of value and what's super popular and what's deeply unpopular. Now, is anyone talking about energy stocks or bank stocks like I have? No. Is anyone talking about companies in emerging markets where the economies tend to grow a lot faster than ours because they have faster population growth? No one's really talking about emerging markets. If we're going to have all kinds of economic growth as we move out of the pandemic, where is all the copper, the iron, the nickel, and the other industrial metals and other materials? Where's all that going to come from to build our fancy new electric vehicles and other machines? So maybe a mining or metals ETF, which again is very deeply unpopular, maybe it's a good bet. And I guess what I'd say ultimately here is to think not so much for the next 2 quarters, but envision where the world might be 2 or 3 years from now. Now, chances are the most popular stocks then will be at least somewhat different than the most popular stocks now. And our job as investors is to identify those possibilities, lay down our bets, understand the risk and reward, and then watch as they play out and adjust accordingly. The main focus that I've always talked about is, big winners, small losses. In the stock market, not everything we bet on is going to work out. And it just so happens that with the tech stocks, they get written about so much and talked about so much because they've been so successful. But at some point that changes, and you don't want to be the last person holding that stock when that changes. And all I'm trying to say is that when you understand the relationship between prices and whether a stock is undervalued or overvalued, it gives you an edge and gives you a chance to better identify, buy early, and hopefully get out before a stock kind of fulfills its ultimate value and then moves lower for a while. So if you like what I'm talking about, make sure to keep following me on social media and of course subscribe to our YouTube channel. I'm Jeff Yasteen.